Welcome back, folks, ladies and gentlemen. Greg Silverman here, your alternative investment scout. We're looking out into the alternative universe and seeing what looks good for future appreciation. Not investment advice, folks. This is Greg Silverman. I'm your Chief Investment Officer for the next however long you want to be with us, but each of our segments is about 10 minutes long. So what we do is we like to curate a lot of articles, see what gets out there, see what you all liked, what you shared, and then we do a come learn with me session where we'll read the article together, you and me, and hopefully we'll get some good information out of it. So this is come learn with me. This is part of our uranium subsection. Uranium and uranium mining is an area we're really pretty keen on from an investment perspective. So if you want to know more about our investment side of our business, at the end of this video, we'll be flashing a URL somewhere in the universe above me. And come join us, come check out our investment side. But for now, let's read this article. There seems to be a perfect storm in favor of uranium investors. As children, we may have dreamt of one day growing up to own diamonds or gold, perhaps even emeralds, but only the weird kids wanted to own uranium. Flash forward today, and times have changed. Uranium is trading near its 9-year high and appears to have a perfect storm of variables catapulting it higher. By the way, weird kids is synonymous. That's another term that we use to describe ourselves. But the point is, if you're weird or on the fringes, it means other people haven't found out about this investment yet. That's why we're weird, but that's why we're making money. Okay. The variables providing upward price movement include reduced output as many mining operations were discontinued, increased demand as new reactors are in the planning stage, and large physical investments in uranium, which take it off the market to generate electricity. So just a reminder, we highlight various points and then we summarize them. So you want to catch up on Monday morning with your coffee and see what's happening with uranium, you just read our 5 bullet points and you're up to speed. Output problems. Worldwide uranium production fell to 123 million pounds in 2020, the lowest since 2018. Current production falls short of global uranium demand, which is around 180 million pounds and expected to grow. Simple mathematics, guys and gals. The demand is still being met by drawing from inventories, downgrading weapon-grade sources, and uranium underfeeding, re-enriching uranium tailing. These strategies are unsustainable. Major uranium mines are closing, which removes 5.6 million pounds of production. On January 8, 2021, the Ranger uranium mine in Australia stopped production, lessening annual production by 3 million pounds. The Comac mine in Niger also stopped production on 31st March 2021. This removes an additional 2.8 million pounds of production. Let's see where the Comac mine in Niger is. No, you think Google Maps would pick it up, wouldn't you? Okay, very successful. We're not getting a location. Google Maps. Let's try one last time. Google Maps, Niger, Comac. Yeah, uranium. Okay, here we go. Country of Niger, oil and mining. Niger. There is little Niger just next to Nigeria. All right. Safe to say it's a place not many of us have been. Bringing new mines online, particularly within this highly regulated industry with dangerous materials and heightened environmental consciousness, will be slow. It's the heightened environmental consciousness which we're seeing changing in the mass psychology. Increased demand as fossil fuel generating plants go offline to meet environmental goals. Wind and solar depend on perfect weather conditions to meet as needed demand for power. The need for additional high output on-demand energy sources increases with each fossil fuel plant that closes. Huh? Good English. Adding to the demand are electric vehicles that are expected to substantially add to the burden, even if we are not producing fossil fuel generation. So the demand is high on at least two fronts: new sources to replace old plants, and even great electric output to service vehicles tapping into the grid. And there's the price of U308. Investments in uranium. There's a relatively new uranium trust that purchases physical uranium, holds it in an investable trust, and sells shares of the trust, not much different than a gold trust. If you're registered to receive channel checks, daily emails, you may be aware that this is the Sprott Physical Uranium Trust. This alternative to investing in the yellow metal rather than uranium futures or uranium mining stocks like Energy Fuels, Encore Energy, ENCUF, has become popular alongside U308 stocks and futures. One big difference is the uranium placed in the trust reduces available uranium for energy. Investors in all three types of uranium investments benefit from the trust as it produces usable supply. Conversely, investors in mining stocks understand that they are in their own way helping provide. Investors in mining stocks understand they are in their own way helping provide capital, potentially assisting more uranium production. Look at the chart above. It shows 3 years of uranium futures price movement. Uranium prices quickly rose from October 8th of this year onwards. At the same time, the Sprott Physical Uranium announced it bought 300,000 pounds of uranium. 3 days earlier, they had purchased 500,000. Additionally, the US is investing in a strategic uranium reserve. Yes, a lot of people spoke about this around Trump, when Trump was around, because he actually brought this into being. But you don't hear much about it today, do you? Okay. Additionally, the US is investing in a strategic uranium reserve. This is expected to pull U308 from mining production in the US. 2021 proposed federal budget includes $150 million for the creation of a US uranium reserve over the next 10 years. That's nothing. It's a pittance for the US government. While this can serve to stabilize prices down the road, initially it would be competing for a scarce resource from US-based mining companies. Takeaway: there are three main factors providing a bullish market in uranium. Supply, from the standpoint that high production mines across the globe have been shut, and there is a long time lag in finding new locations and opening new mines by itself will keep prices steady. From the demand side, the move away from fossil fuels leaves a need gap that must be filled with high output generation similar to nuclear energy. From a demand perspective, new plants will create a growing need, especially as the need for electricity grows. And physical ownership, now available through trust ownership, has taken supply off the market, while the US Strategic Uranium Reserve may also begin to compete with all other purchases of minerals. That is back in favor. Sure. Okay, that was a tough one to get through, but it does summarize the bull case. There's always a bear case, but that summarizes the bull case. You want to learn more about how we're investing in uranium miners? Here's the URL. Come on over, visit us, get hold of us. We'd love to speak to you. This is Greg Silverman for another session of Come Learn With Me, Uranium Mining, out for now.